consumers continue to spend despite all of the outside factors that are straining their budgets. This is Thursday, May the 14th, and this is Markets with Megan. If you like this podcast, you can subscribe, hit the alarm bell, share it with your friends, family, colleagues, anybody who wants to dig into the economic data that we get on a regular basis and what it means for not only the markets, but the economy. And today we got a report on the consumer and their spending patterns. This is the monthly retail sales report for the month of April. And in the month of April, we're here 2 months into the turmoil that's going on in the Middle East. Gasoline prices still remain very high, but yet retail sales numbers are relatively strong. Now, when we look at this data, the headline numbers came in as expected. It was all due to an increase in gasoline stations, more higher gasoline prices, more spending at gasoline stations. We did see, though, at the core level, what we call the control group. This is an input into the GDP data. That excludes things that are volatile. It excludes food, autos, gas, and building materials. That rose 5.5% for the month, which was a little bit better than expected, but it comes on the back of last month for the month of March when there was a slight upward revision to 0.8%. Now, when we dig into these details, where that core spending laid, it was in electronics, sporting goods, internet shopping, and then restaurants. And on a year-over-year basis, this indicator is rising the most we've seen in 8 months. Now, there's a couple things we want to highlight with this report. The most important thing is that this data is not inflation adjusted. And what we mean by that is if the month of April we saw higher prices on things like electronics or sporting goods because of the inflation pressures that are emerging due to the conflict in the Middle East, it won't show up in this data. It's just going to show up as a higher dollar amount. So we don't have a way of really deciphering between what amount of it was because the dollar amount was higher than the last month and what was true pickup volume in spending on these categories. So we look at this report, the markets tend to really react on this report. Yes, it's positive, consumers are spending, but some of these components, take electronics, for example, we've already talked about that in the inflation reports, that we're seeing an uptick in electronic components in inflation because of semiconductors and then the bottlenecks and logjam we have in the Strait of Hormuz. So that could be more inflation, more of a factor of inflation than it could be in volume in spending. Same thing goes with restaurants. Is it that food prices in restaurants is higher because we've talked about the fertilizer problem and the really record high numbers we're seeing in some fertilizers, what that means for food prices. So the market's taking this as a good report. Equities are higher. It could have something to do with the retail sales, but equities are really higher today just on that AI trade. Again, this market continues to be very heavily focused on just AI. There's not a whole lot of breadth in the market, meaning that this is not a broad-based rally. This is really a tech rally. This comes on Cisco, which jumped the most in 14 years, and that's because they announced a better sales forecast as well as some restructuring, which unfortunately does come with some reduction in their workforce. But equities are liking it today. Bond yields are also a little bit lower, and oil prices are relatively flat for the day. So it's better than what we've seen recently with big increases in energy prices. We'll see what that brings for us tomorrow, but that's all we have today. If you like this podcast, you go to marketswithmegan.fm. Thank you.